This is the Asia Trade. I'm Shery Ahn in Tokyo. These are the top stories this hour. Asian equities are primed to advance after a fresh record high on Wall Street. U.S. inflation data out later set to define Fed policy in the coming months. 7 & I to report quarterly earnings amid news of potential restructuring. It faces a higher takeover bid from Canada's Couche-Tard. And Florida braces for impact from Hurricane Milton with warnings of torrential rain and a destructive storm surge. We're live in Tampa this hour. Take a look at how Asia is trading early in the morning session. We're seeing Kiwi stocks gaining ground for a second consecutive session, and this, of course, after we saw the RBNZ coming out with a 0.5 percentage point rate cut, stepping up the pace of easing. So we saw the Aussie actually rallying against the Kiwi dollar in the overnight session. We're right now holding a little bit steady, but when it comes to, of course, Korea, we will see it back from holidays today, and we could see a little bit of a pop given that South Korea has been included to the FTSE Russell Global Bond Index. But take a look at what's happening with the Nikkei right now. Gains of 0.1% for futures. We have seen that advance given that the Japanese yen continues to weaken against the U.S. dollar. It won't just be the earnings from 7 & I that we'll be watching, but also fast retailing expected to report a solid quarterly earning. The Japanese yen holding at that 149 level against the U.S. dollar. As we continue to see strength on the dollar, we're seeing the greenback now gaining ground for an 8th consecutive session. Take a look at how U.S. futures are setting up, because the dollar is now seeing the longest winning streak in more than 2 years. You're seeing not a lot of movement right now in U.S. futures. This, of course, after stocks rose to that record high. What is it this year already? The 44th record high, the S&P 500 approaching that key 5,800 level. This, of course, as we got the FOMC minutes as well. We just heard from the San Francisco Fed President, Mary Daly. She expects the Fed to continue lowering rates, although we did see a little bit of a pushback against Chair Powell's outsized cut in the FOMC minutes. We are gearing towards U.S. inflation numbers as well. Our global economics correspondent, Enda Curran, joins us now for more on the FOMC minutes and what to expect in the U.S. economy. Enda, let's start with the FOMC minutes. A little bit backwards looking, especially given that we got the new labor market data. But what can we make of sort of what it will mean for the trajectory of the Fed going forward?
Well, it shows, Shery, there was robust debate inside the Fed over how much of a cut to make. My own Fed-watching colleagues picked up on several of the observations that while the majority in the end came down with the decision to go with the 50 basis points move, there were those who would have preferred to go with a 25 basis points move. Of course, there was also Governor Bowman who dissented from the move altogether. And at the time, even though the focus was on labour market concerns, like you mentioned, because it predated last Friday's jobs data, it does suggest that going forward, the members of the FOMC will be more comfortable readjusting to that typical 25 basis points rate cut. Now, they didn't signal when that might be coming. We have had comments from Chairman Powell in the interim making the point that there are no set course here. But the bottom line for the minutes today was the 50 basis points decision came after a fairly robust discussion. Most people were probably comfortable with a 25 basis points cut, and that seems to be the narrative going forward, that the moves from here will be more incremental than a jumbo-sized move we saw in September.
What can we expect from the CPI numbers?
Well, again, it's interesting because the focus had been all on the jobs market here. That was supposed to be the story, shifting from inflation to jobs. But jobs were so strong last week. Now you have economists saying, hang on a sec, keep an eye on wages, keep an eye on what's going on with inflation. The numbers tomorrow on a headline basis are expected to show that headline inflation still remaining subdued, probably because of the impact from energy. But there will be a lot of focus on what's going on with shelter costs and rent in particular. That's been the kind of outsized contributor to inflation over the past year or so. That hasn't slowed nearly as quickly as policymakers expected. So keep an eye on rental inflation tomorrow. And the other thing, of course, to watch tomorrow is core inflation. Some analysts saying they wouldn't be surprised if there was a slight tick up there, given some of the stickiness in the services side of things. But nonetheless, if there was a bigger than expected tick up in core inflation, that would only complicate the whole Fed narrative all over again. So tomorrow's inflation numbers are expected to be, again, sticking to the narrative, heading in the right direction, but an upside surprise certainly would put a fresh gloss on the Fed debate.
Yeah, we'll be watching the market reaction really closely. Our global economics correspondent and the current there. Let's bring in our next guest who expects the U.S. CPI data to reflect ongoing disinflation as well. Gurpreet Garewal is a global fixed income macro strategist at Goldman Sachs Asset Management. Great to have you here in the Tokyo studio. So what are your expectations for CPI, and could it at all change the calculus for the Fed?
Well, first of all, thank you for having me on. Like you said, we expect the CPI data to reflect ongoing disinflation. If we level set a bit, where was inflation? Where has it progressed to? Headline inflation peaked at 9%. It's down to below 3%. Core inflation peaked at 6.6%. It's now halved. We think you're going to see ongoing rebalancing in auto, rental and labour markets, and that should support further normalisation in inflation. And, because of this, what's really in the driving seat for the Fed is what happens on the labour market data.
I know the September data seem to have switched the narrative, so I do wonder how much more focus does the Fed need to put now on inflation again back from the labour market?
Yeah, I think the Fed has acknowledged that the balance of risk is now more balanced. They are more focused on downside risks to the labour market. Now, like you said, the September report really reset the narrative on recession risks in the UK and the health of the labour market. It was an A+ report by all accounts, solid job growth, the unemployment rate declined. And I think what is key for investors is that central banks have moved from inflation control to conventional business cycle management. And what this means is that they are going to be proactive if you see any downside risks, and this really should put fixed income front and center of any investor allocation decisions.
Because it's not just the U.S. now that's starting its easing cycle. We're seeing the synchronized global easing, right? So what do you like at this point in fixed income then?
Yeah, it's a great point. You do have this global easing cycle underway, but each central bank is going at a different pace and likely to a different destination. So that creates very interesting relative value opportunities. But big picture, in our fourth quarter fixed income outlook that's out over the next week or so, we highlight three key investor themes. The first is dial up duration. You want to be adding bonds to your portfolio. Downside growth risks are dominating upside inflation risks, so you want that protection. You want to capture the benefits from these easing cycles. A second key theme is continue earning income in this elongated expansion. Corporate fundamentals are sound. You can still earn a healthy rate of return by lending to high quality companies. And the final theme is to go global. Like I said, there is no one size fits all approach to these easing cycles. We saw the Reserve Bank of New Zealand deliver a 50 basis points rate cut this week. But here in Japan, where we are, we expect ongoing normalization. So this creates relative value opportunities.
I want to hear a little bit more about the global markets, but I want to take you to the question of the day because, of course, one of the key risks right now for global markets is the upcoming U.S. election in November. So right now, our colleagues asking, where will Treasury yields be post-election?
Yeah, I think investors right now are in a wait-and-see mode to get clarity on where the policy picture lies. Primarily what has been driving markets is the U.S. business cycle. We think that you could see risks or market focus shift to the U.S. election in the coming weeks, but I would say big picture we're still in wait-and-see mode, and if the Fed is implementing ongoing normalization, it's really the labour market data that's going to be key for market direction.
Is it a wait-and-see mode here in Japan as well? I mean, the ongoing normalization is the other way around here with the Bank of Japan, but at the same time, there's been so much rhetoric back and forth with the government where the BOJ goes from here. The BOJ doesn't seem to be in a rush either way. As the Fed is cutting, the BOJ hiking. What does that mean for rates?
Yeah, I think, we have lots of noise in markets, and one of the things we always say to our investors is to focus on fundamentals. Utilize your data analytics and take a long-term view. When we focus on the fundamentals, the macro conditions in Japan really do support ongoing normalization. We do think that the Bank of Japan may hold steady this month, but we think there is a case for ongoing normalization. You may see another hike in December, again in January. You have wages growing at their fastest pace since the early 90s. The underlying inflation picture is shifting. That doesn't warrant the ultra easy policy that we have had for many years. It does warrant this steady normalization. So we do expect that to continue, and we are underweight Japanese rates given we are more hawkish than market implied pricing.
Ultra easy policy also coming from the PBOC as well at a time when we're also getting that stimulus, and we're expecting that finance ministry briefing finally on Saturday. How closely are you watching this?
very closely. You know, we've seen clear signs from the Chinese policymakers that they want to revive demand. One way to do that is to stabilize the property sector, the equity market, improve consumer confidence by addressing those issues, and that's how you can get consumers to spend rather than to save. But like you said, we are in wait-and-see mode for more details on fiscal. You've seen a sizable market response to the announcements that we've had so far. We don't expect the economic response to be seen until 2025.
So where are the opportunities in the bond space then?
In the China market, yeah, I'd say we are biased to be overweight front-end Chinese rates. We think the policymakers' clear commitment to supporting growth indicates more monetary easing ahead, so we see opportunities there.
Gurpreet, good to have you with us bright and early here in the Tokyo studio. This is Gurpreet Garewal, macro strategist at Goldman Sachs Asset Management. Coming up on the Asia trade, a closer look at Couche-Tard's sweetened offer for 7 & I as the Japanese firm prepares to report quarterly results. We talk market strategy with State Street. Plus, regional geopolitics in focus with the U.S. ambassador to Japan, Rahm Emanuel. Much more ahead. This is Bloomberg. President Biden and Israeli Prime Minister Benjamin Netanyahu have spoken for the first time in a month. The call comes as Washington seeks to temper Israel's retaliation against Iran's missile attack last week. Bloomberg's Michael Heath is with us. Of course, there was this really awkward period of silence with the two leaders not talking for a month. What did we hear about the content of that call?
Hi, Shery. Yes, I mean, there's obviously tensions between the two leaders, and as the excerpts of a book by Bob Woodward have sort of shown that the Biden administration's been quite frustrated with the Israeli leader. So the call, I mean, it was fairly bland, to be honest, the readout that came out from the White House, which again, I guess, suggests that there's not a real meeting of minds there. So at this stage, I mean, President Biden obviously condemned Iran's attack. He noted that, Israel has obviously a right to defend itself, but there wasn't anything terribly specific about, the sort of response that we might see. And of course, this is what's playing on everybody's minds. Just, what will Israel do? I mean, Iran has already come out and said that if Israel undertakes any retaliation, it'll hit it with, hundreds, if not thousands, of missiles. So, it's really sort of all up in the air at the moment. Israel is expected to have a security meeting in the coming period, and which presumably is when they'll decide what they're going to do. So it could be that something happens quite soon. It could be that it delays longer. I mean, in the case of Iran, when it attacked Israel, that had been running on for quite some weeks. That they'd been sort of threatening to do something there, and then it sort of happened. So we're just sort of in wait and see mode there. But yes, the call, it doesn't seem like it's not really a meeting of minds there, and there's obviously been some frustration on the US side.
So we're hearing about all of these different alternatives, whether it's hitting Iran's energy facilities, nuclear facilities, but we know for a fact that the European Union at least is coming out with a package of sanctions. So what's on the table right now? Yeah, well, I mean, the question is, I guess, if you're going to try to, I mean, the nuclear issue, we understand sort of why Israel would want to do that. I mean, a nuclear-armed Iran is something that would set off, Saudi Arabia and other countries trying to get nuclear arms themselves, just for self-defence at least. But you can sort of understand where Israel's coming from there. That's a very difficult thing to do because the Iranian nuclear facilities are dispersed. They're underground. They're well fortified. Israel actually took out attempts by Iraq to build a nuclear bomb in the 80s very successfully, and Iran learnt from that. With oil, the oil infrastructure that's being discussed, the idea there is then to hit Iran economically. And what Europe is sort of saying, and I think President Biden is sort of, he's more on this track as well, is that use sanctions rather than using missiles to do the same sort of trick of squeezing Iran's economy, more on the economic front. I mean, Iran's not in great shape. It may have all these proxies around, etc., but it has its economy is not in good condition. It has a very young population. It has high unemployment. There's a lot of frustration there from the reports we see with the
with the regime, and with all these resources being diverted to a war with Israel that doesn't interest local people. So, yeah, I mean, what Israel does is to be fascinating. The US, I think, their guidance is sort of that if Israel is going to do this, it should target military facilities or intelligence facilities or the military-industrial complex, keep it sort of focused on the war side.
But given the tensions that you've talked about between the Biden administration and Netanyahu right now, who are the other players in the international community who could mediate?
Look, it's difficult. I mean, because the US, the US, is the only one with real leverage over Israel there. That's the issue. I mean, France obviously has had a very long relationship with Lebanon. I mean, it was the former colonial power, and President Macron has been holding meetings as well, trying to work out what they can do to I guess, cushion the impact of what's been happening in Lebanon. And France traditionally likes to sort of play a more independent role. But the question is how much Israel is going to listen to them. And, President Biden is sort of in this conundrum of his own making. He's made it clear that he will stand by Israel and he will defend it, which then just reduces the leverage that he has, because the US is a key arms supplier, a key defender of Israel. And if he's not prepared to threaten or go through with some of these use some of his leverage over it, then Prime Minister Netanyahu knows that he's almost got a free hand there, particularly in a case where President Biden's sort of a lame duck. And if President Trump's elected, Prime Minister Netanyahu knows he'll have no pressure from the US for the next 4 years.
Yeah, Bloomberg's Michael Heath there with the latest on the Middle East crisis. We have more ahead on the Asia trade. This is Bloomberg. Here are some of the top stories that we're following this hour. Taiwan's President Lai Ching-te is preparing to use his first National Day address to sound the warning about China's alleged tactics against the island. Beijing is set to hold military drills that will coincide with Lai's speech. Sources say Lai will talk about China's so-called gray zone activities and disinformation campaigns described as cognitive warfare. Japan's Foreign Minister Takeshi Iwaya has asked China for a proper account of motives behind the stabbing death last month of a Japanese schoolboy in Shenzhen. In the first phone call, he told his Chinese counterpart Wang Yi uncertainty around the incident is worrying Japanese people in China. Beijing has also not explained the motives behind the June stabbing incident against Japanese nationals. Japan's new Prime Minister Shigeru Ishiba has dissolved the lower house of parliament ahead of a national election on October 27th. While it's unlikely the ruling LDP will lose control of parliament, the scandal-plagued party may drop some seats. Ishiba's surprise emergence as Prime Minister signals a bid by the LDP to strengthen support by turning to a leader with a cleaner image. The Japanese yen at the moment holding steady at that 149 level against the U.S. dollar. We have seen a little bit of downside pressure given the strength of the dollar in recent days. We're talking about the dollar gaining ground for an 8th consecutive session. That would be the longest winning streak for the Bloomberg Dollar Index in more than 2 years. And this, of course, coming as we're seeing Treasury yields continuing to rise. There's a little bit of hesitation, and it seems that the 50 basis points potential rate cut from the Fed is out the window given the latest data. But of course, we're also watching very closely what's happening with Hurricane Milton in Florida. It's really closing in on the West Coast right now, packing torrential rainfall and a destructive storm surge that could inundate some of the state's fastest growing counties. Here's what Florida Governor Ron DeSantis and President Biden have said.
Hurricane Milton is still a major, very strong hurricane. It's currently a Category 4 hurricane with maximum sustained winds of 155 miles per hour. That is just a whisker shy of a Category 5. And while there is the hope that it will weaken more before landfall, there is high confidence that this hurricane is going to pack a major, major punch and do an awful lot of damage.
We've already directed the Department of Defense to be ready to provide active duty service members to support Florida after the storm surge if Governor DeSantis requests the help, which I expect he might. just like we did in North Carolina.
For more, let's bring in ABC News reporter Jacqueline Lee, who's in Tampa, Florida right now. So what's the situation like on the ground, Jacqueline?
Hey, Shery, so, conditions are really starting to deteriorate. You can see the wind and the rain really picking up as the hurricane continues to slowly make landfall here. Now, of course, there's a huge concern about the storm surge. Officials have been warning up to 13 feet of storm surge. And the biggest concern is for those people who live in single-family homes or in mobile homes right along the coast. When you're dealing with that level of water that rises, and it will rise quickly, officials have made it clear you will die. That is very dangerous. So what they've been doing is they've been trying to push residents to either evacuate north or go to shelters. With more than 200 shelters available and more than 200,000 residents able to pack in, they say that is the safest place to be, because ultimately when this hurricane comes through, you do not want to be in a situation where you have no electricity, you can't see anything, it's pitch black, and then you have that water rising and no one can help you. Shery.
We've heard concerns about some people not necessarily wanting to evacuate at this point. So how are residents preparing, and what do we know about really the people in Florida really taking shelter?
Oh, absolutely. So, of course, there are Floridians who say we have, survived plenty of storms. We will survive this one. So what we've seen them do is not only were they filling up sandbags and boarding up their windows, but, of course, they were going onto the grocery stores. They were getting all of the cases of water. When we were at the grocery store, we saw the water was out. There was no bread left. The canned food was gone. So people are stocking up for days, preparing to hunker down, waiting for the storm to pass. And then when it does, we'll ultimately see what that devastation is. Shery.
Jacqueline, stay safe. Jacqueline Lee there reporting for us from Tampa, Florida, ABC News reporter. Take a look at how we're setting up. U.S. futures at the moment not doing that much, but this, of course, after we actually rose to that record high already. We're talking about the 44th record high this year. The S&P 500 approaching 5,800 as we gear up for U.S. inflation data. The expectation right now is for that data to moderate, the smallest gain in about 3 months when it comes to the month-on-month number. But we are watching for also earnings season. Remember, we are getting JP Morgan kicking off bank earnings on this Friday as well. Treasury yields have gained ground, the 10-year yield topping 4%, all to do with where investors are expecting the Fed to go from here. Traders pricing in less than 50 basis points rate cut by the end of 2024. This is Bloomberg. And we're setting up for the Japanese market opens with the yen trading stable at that 149 level against the U.S. dollar. And this to do, of course, with the incredible strength that we've seen in the U.S. dollar as we await right now the PPI numbers out of Japan in about 20 minutes or so. But let's talk a little bit about one company that we're following today. That would be, of course, Seven & i. Japan's Yomiuri reporting that Seven & i will establish a holding company for its non-core subsidiaries under a restructuring plan to focus on its convenience store business. The company reports earnings later today after Bloomberg broke news that Canada's Couche-Tard has increased its buyout bid to $47 billion. Senior editor Reed Stevenson joins us now. And of course, with us is also UBP Senior Portfolio Manager Zuhair Khan to discuss what's happening in really the broader space here in Japan when it comes to these corporate takeovers. But Reed, let me start with you because, of course, we have earnings as well from Seven & i. What can we expect?
Yeah, not just earnings, but we're going to get CEO Ryuichi Isaka speaking for the first time publicly since news of this Couche-Tard interest came out in August. And, you know, between then and now, we've seen this sort of long period of news trickling out. We, of course, have the indicated price coming out from Couche-Tard both last month and then, of course, as recently as this week. And then on top of that, you know, we've seen news trickling out about a potential restructuring. So as if that weren't enough, The other thing to watch out for with 7 & I earnings today is the possibility of some sort of downward revision to their outlook. Analysts are already expecting a level below what the company has already forecast. And then also just their recent performance. Convenience store sales in Japan and the U.S. have not been doing well. So it's against this sort of very mixed backdrop. Performance at the business, this interest by an outside buyer, and then which has also spurred all this talk of restructuring. So it's going to be a pretty full day.
And really, Zuhair, with that backdrop of those unsolicited offers perhaps in Japan becoming more common, is just 7 & I an indication of what's to come?
Yes, I think this is absolutely the beginning of a trend. There are 3 things that make Japanese companies particularly vulnerable to takeovers. The first is that they have very cash-rich balance sheets and low valuations, especially when you look at EV/EBITDA. So it's very easy to finance the acquisition of Japanese companies through debt because they don't have any debt. So you can just borrow the money to take them over and use their own cash to buy them out. The second thing is, and this is very true of the 7 & I case, 7 & I has multiple unprofitable, low-margin business lines. And if you just exit those business lines, you add value to the company. Now, finally, 7 & I is starting to do the things that they should have done years ago. Investors were telling them to do this years ago, focus on their convenience store business. They wouldn't do it themselves. And it takes an acquirer, Couche-Tard, to come in and say, okay, we'll do it if you don't. So I think, you see that with all the Japanese companies.
Yeah, and I mean, take a look at the environment. We've talked about this many times before. I mean, there's a reason why Couche-Tard is interested in 7 & I in terms of corporate governance, and of course the change in corporate governance we've seen in Japan, as well as changes to the foreign exchange code, et cetera. I mean, tell us a bit about how the environment has brought us here.
Yeah, so I think in this particular case, the most important thing is the change in the Fair Mergers and Acquisition Guidelines coming out from METI last year, which means that company management can't just sort of, off the hand dismiss an unsolicited takeover bid. It actually has to go through a process where neutral, independent people review the bid and decide whether it makes sense or not, whether the valuation is reasonable or not. So that's one thing. And then before that, there's the overall long-term development of the corporate governance code in Japan, companies having to bring in these outside independent directors who may have a very different view from management, right? And then the final thing is last year, the Tokyo Stock Exchange focused on companies with low price-to-book multiples. And again, here, 7 & I is again an example of that, and then created by its own inefficiencies and poor management of things outside the convenience store business.
We're seeing more of these Japanese firms with these low-margin, low-value companies.
Yes. I mean, I'll tell you, it's shocking, but we did an analysis of the top 100 companies in Japan, and we found only 34 of them didn't have low margin or loss-making business segments. And in fact, 25 of those top 100 companies had 2 or more low margin or loss-making business segments. But culturally in Japan, they're not willing to get out of that, because in Japan you still have this problem of the old retired CEOs and chairmen sitting as advisors. And these are their old divisions, these are their old pet projects, and current management can't go and restructure these businesses. And this is why it's taking these outsiders to come in and bring the change in Japan that the management won't or is unable to do themselves.
And the dynamic that's different this time, of course, is that a majority of 7 & I's board is in fact outside directors. So this is going to be a really interesting situation as we go forward. The other thing I do wonder about, and again, we're kind of staying with 7 & I here, is given the new price that we learned about yesterday, the shares are trading well below that. I mean, how hard is it going to be for management to justify not really taking this offer seriously?
So I think there are 2 aspects to this. The first is that actually the Couche-Tard offer is in dollars. And given the yen volatility and how weak the yen is today, for Japanese investors, given completion is going to be sometime, many months from now, and the yen may be much stronger, so what they receive in yen may not be as much. So I think that is impacting this as well. But then there's also the skepticism about whether this deal can actually go through, given Seven & I has now said that they're a nationally important company, etc. So there's a lot of skepticism about whether the deal will go through and in what form it'll go through. But I think that doesn't sort of in any way reduce this trend of unsolicited bids. This is the first of many that are going to come.
Are they mostly going to come in specific sectors, for example, consumer staples or consumer discretionary? What areas in the Japanese market could we see more of that happening?
Anywhere and everywhere. I mean, this is, let's say, the sad reality of the Japanese market, that you have the same inefficiencies that you see in Seven & I across the board in corporate Japan. I mean, most Japanese companies are inefficient conglomerates. They have inefficient balance sheets. And it's very easy to finance a takeover.
Do you find a little bit of a discrepancy when it comes to the government really trying to liberalize the market, trying to give this reform a push, but at the same time designating them core businesses, which supposedly, according to the finance minister, shouldn't make it more difficult for an acquisition? But, I mean, does that send mixed messages, though?
It does to an extent, and I think here what we can see is that there isn't an absolute clear consensus within Japan on this, right? But I think the trend is clear. I think Japan is rediscovering its sort of capitalist mindset and roots. I think it's moving back to much more of a free market capitalism. And then especially when you're talking about, acquirers, whether it's from the U.S., Europe, Canada, these are allies. And I don't think that the national defense point really makes sense.
And in any case, I mean, it just really looks like the train has left the station. It's not coming back, is it? It's
not coming back. I mean, I think this is just going to get stronger and stronger. If you look at Japanese boards, they're becoming more independent. Japanese management is now more aligned with shareholders in terms of the way they're compensated and in terms of stock. So if you look at Japanese management who, let's say, 5 or 10 years ago started paying themselves in shares, those that have actually managed to raise the share price by doing the restructuring, a good example would be Hitachi. Hitachi board members 7-8 years ago owned $1 million or $2 million of their own shares. Well, those shares today are worth $10 million.
So are we going to see more like Seven & I's in the coming months and years?
Absolutely. Yeah. I think the cat is out of the bag. Yeah. This is going to be one of the most dynamic markets for acquisitions in the world.
That's going to be very exciting. Zuhair Khan, thank you very much for joining us. Reed Stevenson as well, of course, they're the Senior Portfolio Manager at UBP and our Bloomberg Senior Editor joining this roundtable. And of course, what's to come in corporate Japan. Thank you to you both. We do have breaking news at the moment. We're now hearing that TD Bank is expected to pay about $3 billion in penalties and accept limits on its growth in the U.S. This would be as part of a settlement with regulators and prosecutors over charges that it failed to properly monitor money laundering by drug cartels. This is now, according to the Wall Street Journal, citing people familiar with the matter, that this would be as part of the agreement that the bank's primary U.S. regulator, the Office of the Comptroller of the Currency, is expected to impose an asset cap barring the bank from growing above a certain level in the U.S. We'll have more ahead on the Asia trade. This is Bloomberg. China's finance minister will hold a briefing on fiscal policy on Saturday as investors clamor for further stimulus of the world's second biggest economy. For more, let's bring in our China correspondent, Min Lo in Hong Kong. So markets were disappointed from not getting anything from the top economic planner, but finally, could we see something from the finance ministry?
Yes, this is the missing piece of the puzzle, right? We had the powerful monetary stimulus coming from the PBOC, and then the NDRC briefing was really disappointing. And finally, the Ministry of Finance is holding its own press briefing this Saturday. And the Ministry of Finance is tasked with issuing special sovereign bonds. So this is where we could potentially hear that number, the size of that fiscal stimulus package and the composition of it. Economists are expecting about 2 trillion yuan in terms of stimulus stimulus package, Citibank had a higher estimate of 3 trillion yuan, and speculations are that funding is going to be used to boost domestic consumption, to also help fund some infrastructure investment, to recapitalize banks as well. Currently, there are already 1 trillion yuan in special sovereign bonds that are planned for this year that are earmarked for projects like technology, like disaster relief, and also to fund some of that subsidies for the equipment upgrading program, the household appliances and EVs and the like. And so investors have been really impatient to see the government stop dragging its feet on the fiscal policy side. And we've been hearing very extreme calls, even as high as 10 trillion yuan in fiscal stimulus injection. But some analysts are saying that if the PBOC briefing was anything to go by, we might not get a very high headline number. We might get something smaller to the tune of 500 billion yuan, for example, with more assurances that more injection of similar sizes could follow in the coming months or quarters if the economy needs it.
At least when it comes to the markets, could we see a more positive reaction? Because we saw the CSI 300, given that we didn't get more fiscal measures, plunge and see the worst day since 2008 or 2018 or so?
Yeah, well, markets are really split at the moment. The CSI 300 saw its biggest plunge yesterday. We did get a bounce on the CSI 300 yesterday after we came back from the lunch break, because the MOF briefing was announced during that lunch break. But then you saw that optimism quickly fizzle out and more selling off continued in the afternoon session, which really shows that traders are being quite cautious now. They want to wait and see to assess the strength of the measures before piling back onto the stock market. And it's quite interesting. I was just checking on the terminal that there is very record high inflows to a pair of ETFs in the U.S. that track the China stocks, a bearish ETF and a bullish ETF. Both of those are seeing record high inflows, which just shows how split markets are about the prospects of more stimulus. And overall, traders have been extremely sensitive to any sort of policy-driven announcements so far. So overnight, we saw the Golden Dragon, the Nasdaq Golden Dragon, down a few percentage points. All of this really doesn't bode well for a strong market open today, but we could see some investors coming in to buy on that dip as well.
Bloomberg China correspondent Emanuel was set up for the market opens in China. And these are the latest from the corporate front. Country Garden is said to have missed a self-imposed target date for getting key creditor support for its restructuring plan. Sources say the Chinese developer has yet to deliver a term sheet despite earlier hopes of agreement by the end of September. The delay underscores the challenges that remain in the property sector despite Beijing's latest stimulus efforts. Bloomberg has learned that BlackRock is among firms exploring a purchase of U.S. investment company HPS Partners. Sources say the two companies have held talks as HPS also pursues a potential IPO. Multiple potential suitors are said to be weighing deals, including CVC Capital Partners. Ratan Tata, the former head of Tata Group, who transformed it into a global empire, has died aged 86. As chairman for more than 2 decades, starting in 1991, Tata rapidly expanded through major acquisitions, including Jaguar Land Rover and steelmaker Chorus Group. His death leaves a vacuum at Tata Trusts, which wields control over the conglomerate through its holdings of Tata Sons. We have more ahead on the Asia trade. This is Bloomberg. Tesla is taking the wraps off its long-delayed Robotaxi later Thursday in a high-stakes presentation for the EV pioneer. Tesla's new product will face tough competition in China, where self-driving taxis have moved beyond trials and onto public streets. Our Chief North Asia correspondent Stephen Engel reports from Beijing.
Already dominant in their home market, Chinese EV makers aim to lead as well in the self-driving realm, from advanced robo-taxis to larger semi-autonomous semis.
The game for autonomy is in China. That's why Elon wants to roll out his own FSD there.
Tesla, along with its Chinese navigation partner Baidu, plan to make FSD, or full self-driving, available in China by as early next year, pending final regulatory approval, after getting an in-principle okay from Beijing in April.
It's a watershed moment, and this unlocks a golden opportunity.
At least 9 domestic Chinese automakers, plus smartphone giants Xiaomi and Huawei, among others, have a head start, though, locally through real-world traffic pilot zones in multiple cities across China, seeking a leg up in so-called ground truth data.
At the moment, the local knowledge gives them the advantage because, again, the scale. The scale is uncompared to anywhere else in the world. But as Tesla leans on that scale, as you mentioned with the Baidu cooperation, that is slowly going to be eaten away over time. And unless they can also do that kind of data gathering outside of the country, Tesla will at some point not only become competitive, but may ultimately become a market leader.
I think Tesla's full self-driving is great. I like it too. But FSD's breakthrough only took place in the past 12 months. I think Xpeng's XNGP and Tesla's FSD can both perform well in the global market.
Tesla is indeed a pioneer, but everyone is beginning to get closer. Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
This is a pretty narrow road. You can see all kinds of different scenarios like bicycles, pedestrians, vehicles cutting in, cutting out.
Toyota partner Pony AI has been real-world road testing its robotaxis for more than 6 years. So we hailed a ride in Beijing.
Tesla's FSD coming into this market, is it a threat?
It's definitely a good thing. More competitive this market is, it means the better products will be offered to the customers. We need to have the customer acceptance. That is very, very important. The customers have to trust this kind of technology.
Oh,
whoa, wow, what happened?
Somebody pulled out suddenly.
Oh.
The brakes work.
Safety and certainty are clearly important as well for another electric vehicle industry in China, in the so-called low-altitude economy that includes airborne EV delivery of packages and passengers. Yihong is perhaps the most well-known of the Chinese air taxi makers, but Volant Aerotech 2 hopes to have its $2.5 million VE25 certified by mid-2026 as China opens its lower airspace to piloted and pilotless eVTOLs, or electric vertical takeoff and landing aircraft.
There's a huge potential in this area.
Electric vertical takeoff and landing commercial drones come in many shapes and sizes, and they are throwing lots of money at it.
So much so that at least 20 provinces say they intend to build out their own low-altitude economies.
The vehicle itself is carbon fiber, and it's generally produced all domestically. The battery ecosystems which they use are here. So all of the ecosystems and manufacturing is already located domestically. So that actually gives it a huge edge over any competitors.
Now is a little bit challenging time between China, Europe, and the States. I think it's important to have the communication and not afraid of everything. We are trying to build this aircraft for the world.
The next real test for autonomy, both in the skies and on the roads,
It's slowed down.
will be to see whether customers are afraid or not to get on board. Stephen Engel, Bloomberg News, Beijing.
And we're getting breaking news here out of Japan as well. We have the PPI numbers, year-on-year growth of 2.8% for the month of September. This is surprising to the upside. Economists were expecting growth of 2.3%. Is also an acceleration from the previous month. The previous month has also been revised upwards. The month-on-month number also flat. The expectation was for a contraction. So we are seeing that producer prices, factory gate inflation is also accelerating in Japan, of course. Very important where inflation goes from here. From the BOJ's perspective, we do have the CPI numbers out of Japan next week as well. The CPI number has stayed around or above 2% for the headline number for over 2 years. So we are continuing to watch whether that acceleration of inflation continues as we set up towards the market opens in Japan. Nikkei futures pointing to the upside of 0.9%. We could see those gains extending from the previous session as the Japanese yen is also holding steady at that 149 level. We have seen downside pressure against the U.S. dollar on the Japanese yen. Of course, a lot to do with expectations that the BOJ will not necessarily rush to normalize policy and hike rates. Sort of the same rhetoric that we're getting from the Federal Reserve. No rush to cut seems to be the point, especially with the FOMC minutes that we got overnight. Markets barely budged, but it seemed that Chair Powell was receiving some pushback when it came to that outsized rate cut that they carried out in September. And of course, this all ahead of the U.S. inflation numbers. U.S. futures at the moment not doing much, but those inflation numbers out of the United States should show the smallest gain in about 3 months. So really going in line when it comes to the Fed's expectations and projections about the economy. Take a look at how Australia is trading at the moment, because we are seeing real estate and financials leading the gains. Oil, the energy sector, one of the big gainers as well. This, of course, as we are seeing oil kind of holding steady in the early Asian session, all to do with how we're watching that geopolitical picture unfold in the Middle East at a time, of course, when we're expecting China to increase its fiscal measures as well. Take a look at how currencies are trading at the moment, because we saw a big pop between the Aussie against the Kiwi dollar, and all of this on the backdrop of more gains for the U.S. dollar for 8 consecutive sessions. The offshore yuan holding steady at that 7 level. We could see a little bit more strength as we head towards the Finance Ministry briefing on Saturday. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after another record high on Wall Street, the 44th this year. We have seen, of course, the expectations for U.S. inflation numbers coming out. We are expecting the smallest gain in 3 months. We already have the FOMC minutes overnight. Markets barely budged on those comments, but we saw that Chair Powell received some pushback when it came to the 50 basis point rate cut back in September. So some officials still preferring a smaller reduction. All of this, of course, as we're headed towards earnings season in the U.S. as well. JP Morgan will kick off with bank earnings. The U.S. dollar has been gaining for 8 consecutive sessions, and you can see right there that the Japanese yen a little bit stronger, but still at that 149 level. We are, of course, expecting the open in Japan and perhaps a little bit of a pop given the weakness of the Japanese yen that we've seen. The Nikkei already had gained ground in the previous session, but we are also looking forward to the China Finance Ministry briefing this weekend, which could potentially give it more impetus when it comes to gains across Asian markets. Right now, the Nikkei early in the Asian session up 0.8%. Well, of course, we're also watching JGB yields. They rose slightly in the previous session. We're at that 0.95% level. And we just had the PPI numbers, inflation accelerating from the previous month. Take a look at how Korea is coming back from the holidays. And we have been watching this market very closely after FTSE Russell decided to include Korea in its global bond index. We're seeing that pop to the upside of 0.7% for the Kospi, while the Korean won holds steady at that 1346 level. But remember, the Korean won has been pressured a lot, especially because of the greenback strength. And it's actually formed a death cross that could suggest bearish momentum. That's when the 50-day moving average has dropped below the 200-day moving average. So we'll be watching Korea very closely. Our next guest says she's cautiously optimistic on risk after the latest China stimulus, not to mention the Fed's easing cycle. With us now is Yuting Shao, macro strategist at State Street Global Markets. Yuting, great to have you with us. We've already seen an incredible rally, especially in the U.S. So what are the risks that you're looking out for here?
So I think the U.S. really, kickstarted its rate cutting cycle last month. That's definitely a very positive news for risk overall. And of course, you also have on top of that the tailwind a little bit from the China stimulus. So right now, I think market is, really finding rejoice out of this the combination of good news out of both the U.S. and China. I think looking ahead in terms of where real money is currently, it is still cautiously optimistic. They are slowly trying to get back into risk, but given that we still have the election that's coming up in a month's time, and also you have this slowly escalating uncertainty that still remain in the Middle East. Those things definitely are still, on the back of investors' mind at this point, and we do need to see more clarity, going forward in order for risk to come back even further and be more optimistic from this point on.
Is China a risk here, or could it help really boost markets even higher? Because we saw the disappointment with the top economic plan. They're not really announcing big stimulus, but we do have the finance ministry also briefing this weekend.
Right, exactly. So I think the NDRC conference, earlier in the week was a bit of disappointment where, market was expecting more, especially on the fiscal front, to come out of that meeting. So and now that you have the Ministry of Finance briefing that's due Saturday, so I think market will find, leading into that event, there's definitely a lot of, optimism and hope surrounding more clarity on fiscal as well. And I think in terms of the overall, whether China adds or reduces the risk, I think, any good news out of China is definitely a positive or a little bit of cherry on top at this point, because, looking back a month's time, even before the China stimulus news coming out, the Fed cutting cycle in itself was quite a bit of a boost to risk sentiment. So, any additional help from China is going to, add another layer on top in terms of market finding it helpful for risk.
Especially for markets that are heavily exposed to business with China, right? Korea included in the FTSE Russell Global Bond Index, at least when it comes to sort of the perception of openness and just these inflows into the Korean market. What do you make of expectations going forward for South Korea?
So I think that the inclusion definitely helps in terms of bringing a bit of inflow in the near term, and definitely that speaks to the openness and attractiveness of the Korean market. And I think, going back to my earlier point is that the China story in and of itself will have impact and spillover into the broader EM market. And of course, given its outsized weight for North Asia, it will always have that spillover impact on Korea as well. So more good news and tailwind out of China is definitely going to help Korea as well.
We've seen a lot of optimism for South Korean markets, also for the Japanese markets as well, especially when it comes to some governance reforms, fundamental changes when it comes to Japan Inc. or Korea Inc. Are you seeing that upside?
So in our views, we're still a little bit cautious when it comes to the equity space in Japan. Simply for the reason that we are still in this world where, I know that there's some recent dovishness out of the new prime minister. There is still this notion of, Japan on a different policy path compared to the rest of G10 market. It is still on the hiking path, and that is going to have impact on the yen. And also you have a huge chunk of repatriation that is still waiting to come back to the Japan market, and that is going to cause some reallocation to the bond space. So we're a little bit more bearish on the Japanese equities at this point.
And as we speak, we're getting the latest lines from the PBOC at the moment. They've set up securities funds, insurance companies, swap facilities. We are now hearing that the swap facility size will be about 500 billion yuan. They could be increasing the facility size further from here on out, and that they will accept swap facilities application starting from today. Of course, Yuting, we have seen these moves from the PBOC to sort of become the last resort for liquidity in the markets. How much more impetus can we expect from the markets given this concerted effort coming not only from the PBOC, but as we have been talking about, the finance ministry and fiscal policy later in the week, perhaps?
So I think it's important to note that the very coordinated, a combination of policy that we've had so far really, I think, signals a bit of a change from the authorities' perspective, where there is this increasing urgency to really try to arrest the downside of the weakening momentum and to really bring back a lot of this, getting increasingly entrenched, weak sentiment. So those are definitely the right move in the right direction. And the more policy we get in terms of, liquidities providing for the equity market, and potentially more on the fiscal side, that is going to help, make this rally a little bit more sustainable. And of course, at the end of the day, you need to see more, recovery on the macro side to really solidify this recovery story. But all things we've seen so far is definitely pointing to the right direction. And, more policy is only going to be more helpful to make the sentiment recovery a little bit more sustainable.
Yeah, and we're seeing a marginal strength when it comes to the offshore yuan at this point. We have seen a little bit more support for the offshore yuan in recent days, given, of course, the stimulus measures. But at the same time, Yuting, we have to contend with the fact that the U.S. dollar also continues to strengthen given the path of the Fed. Take a listen right now to what the San Francisco Fed president just said about the state of the labor markets there.
What we saw in the last several months, really since after the first 2 months of this year, is that the labor market has downshifted. It's now at a sustainable pace of growth. We are just where I believe we need to be at full employment, not growing too fast, not growing too slow. And I am now quite confident that inflation is on path to hit our 2% goal.
Given where the Fed and the PBOC are both headed, what are your expectations for the strength of the Chinese yuan?
So in our view, definitely on the macro side from Chinese perspective, more policy support and more solid recovery is going to help in terms of the renminbi strength. But of course, we've seen quite a bit of adjustment downward of dollar yuan already. And, from this point on, we don't necessarily want to see a much stronger renminbi, just simply because, the export side of story is still quite important, especially as we head into a gradually slowing global story. But of course, on the other end, also you have the dollar story where, even daily just mentioned that, inflation is starting to come back to target, or at least from the Fed perspective, there's increasing signals that perhaps we are going to eventually achieve the inflation going back to target. There's still that notion of the labor market strength where it's softening but not weak. That's why, non-farm payroll data and the subsequent adjustment of the dollar, in our view, it's very much warranted. And we think, there is still a little bit of stickiness in the core. And of course, the upcoming data, CPI later today, will give us more signals and signs in terms of where we are on the inflation battle. So that means in a near term, we're still neutral on the dollar. And there's actually, in our view, is a little bit of a risk if we see further strength of the U.S. economy in this a little bit of a soft landing versus even no landing scenario. So we don't really see too much hope of too much of a movement in dollar China at this moment. We think it will probably sort of consolidate a little bit range bound in the next week or two at this period.
Yeah, I've been hearing a lot about the potential no landing, given, of course, the strength of the U.S. economy in recent days. Yuting Shao, good to have you with us, macro strategist at State Street Global Markets. And still ahead, Washington's ambassador to Japan, Rahm Emanuel, tells us why the U.S. and its allies can isolate China economically by forming a new trade defense coalition. But first, warnings Hurricane Milton could raise water levels in Florida's Tampa Bay by as much as 4.5 meters, inundating cities and towns. We have a live update next. This is Bloomberg.
Hurricane Milton is still a major, very strong hurricane. It's currently a Category 4 hurricane with maximum sustained winds of 155 miles per hour. That is just a whisker shy of a Category 5. And while there is the hope that it will weaken more before landfall, there is high confidence that this hurricane is going to pack a major, major punch and do an awful lot of damage.
Florida Governor Ron DeSantis there on Hurricane Milton. For the latest, let's bring in ABC News reporter Jacqueline Lee, who's right now in Tampa, Florida. Jacqueline, so we're hearing that the hurricane hasn't made landfall as of yet, but what are conditions like right now?
Yep. I mean, Shery, as you can see, the wind and the rain has really started to pick up as Hurricane Milton gets closer to making landfall. Now, here in Tampa, we're seeing wind gusts of up to 75 miles an hour. There are more than 75,000 power outages and more than 400,000 power outages across the state. The Florida governor, he just held a press conference. He said the good news is because Hurricane Milton is making landfall earlier than expected, that is good because of high tide. That means it will help with the storm surge. They also say they have search and rescue teams pre-positioned to help jump into action. But ultimately, the biggest concern, as you can see, is the conditions, the wind and the rain and the storm surge. So that is why they're saying all residents have to stay hunkered down at this point. Shery.
Yeah, it looks like a really dangerous situation on the ground right now. What are we seeing in terms of evacuations? Have residents left the area already? What preparations are being made right now?
So in terms of evacuations, right now it is too late. They had to have evacuated either earlier today or in the few days prior. So we saw there was a huge rush both at the airports as well as on the roads trying to get out of here. There was long lines at gas stations, some stations running out of fuel completely. But Governor DeSantis said that there is plenty of fuel here in Florida. They brought in fuel tankers to help refill. They say they are ready, and especially after Hurricane Milton goes through, they will see the length and the depth of the destruction here, Shery.
Jacqueline Lee, stay safe. Thank you very much for bringing us that story live from Tampa, ABC News reporter. For more on the impact of Hurricane Milton, let's bring in Bloomberg Intelligence lead insurance analyst Stephen Lam. Stephen, so we talked about the potential human devastation. We talked about what really could be lost, how big this hurricane could be. What about the insured losses and the economic damage that we could see?
Hi, Shery. Yes, and good luck to all the folks in Florida. So the problem with the insurance companies right now is that they face a really uncertain situation here because the projected loss range is really, really wide. So you can go from sort of low tens of billions of dollars to even over $100 billion. So the problem right now is that the exact location of the landfall is still very uncertain. So probably it will land somewhere south of Tampa Bay. Now, in that case, as a reference, when Ian hit Florida 2 years ago, it hit Fort Myers. And that was further south of Tampa Bay, and that cost the insurance industry about $65 billion. So all in all, I think we're probably somewhere between $50 to $100 billion right now.
Wow, that is huge. Could we see any of the Asian insurers, Japanese insurers taking a hit?
Yes, actually, this is going to be a global event. Not only the reinsurance companies that will get hit, the cat bond market will get hit, but the Japanese P&C insurers will also get hit too. Now, their market share has receded over the years a little bit because the risks that are very prevalent in Florida. But by and large, they're probably a little bit less than 1% in terms of market share as a rough gauge. Now, if that happens, and if the industry loss come in at, let's say, about $50 or $60 billion, then we can see earnings impact equivalent to as high as about 9% for companies like Sompo. Now, for companies like Tokio Marine and MS&AD, the earnings impact for this year specifically is going to be lower because they're expecting actually a much higher stock gains.
You mentioned cat bonds earlier. I mean, we have seen these catastrophe bonds being one of the most profitable strategies for hedge funds in the last year. But then we have so many hurricanes, natural disasters. What are the ramifications in this market?
Yeah, Shery. So if you think about the cat bond market globally, the outstanding amounts, let's say $45 to $50 billion. Not all of it is Florida risk, of course. I think U.S. perils in general takes up about roughly half of that. So if you think about it, it will take a lot of the damage from the direct insurance companies if the insurance loss comes out to be, let's say, $50 billion or above. So the insurance companies will be protected when this is going to be a big one, shall we say. So in terms of the ramification, right, we need to think about the pricing impact going forward. Because of the impact from Hurricane Ian 2 years ago, the insurance pricing has gone up quite dramatically. And of course, the cat bond holders will take quite a bit of losses.
Bloomberg Intelligence lead insurance analyst Stephen Lam there as we continue to watch those warring waters, torrential rains, extreme winds in Tampa right now, those live pictures out of Florida. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how these retailers are trading across Japan right now. Of course, it's earnings season. We are going to get Seven & i's second quarter operating profit expected to fall about 10% from a year earlier. But of course, what we'll be watching is the performance of the CEO as well. After Alimentation Couche-Tard is said to have sent the firm a new offer of $47.2 billion. So we have seen those shares really climb more than 20% since that offer became public. But take a look at fast retailing as well, gaining ground ahead of earnings today as well. Expected to report solid quarterly earnings after high summer temperatures drove strong clothing sales for Uniqlo in the U.S., Europe, and much of Asia as well. Bloomberg earnings specialist Rena Sasaki joins us now for more on this. And Rena, I know we know the Uniqlo, the Airism brands, right, for the summer. I guess they were pretty popular.
Yes, so Uniqlo is expected to, the Uniqlo owner, Fast Retailing, is expected to report it's a record profit for another fiscal year, thanks to the Uniqlo international sales. And for the fourth quarter, as you mentioned, the Airism, the summer clothing collection in North America, Europe, and ex-Japan and China, Asian market, contributed to the revenue growth, and we're expected to see a positive the profit growth.
And all of this coming out, of course, at a time when we have perhaps China and the demand level that we've seen there. People have not been too positive about that market.
Right. So the third quarter, we saw the Chinese markets, the profit decline. But for this quarter, we are closely watching whether the company's the segment earning reversed from the last quarter, for the Chinese market will trail the other markets of profit growth, and it is also expected that the firm is aiming to boost the e-commerce sales by engaging in popular social media sites such as WeChat, and we might expect the company's market strategy shift in the market as the Chinese market is maturing.
Rena Sasaki here, our earnings specialist, with what to expect out of the results here in Japan as we continue to see Japanese stocks gaining ground at the moment. This, of course, as we have seen some gains on a weaker Japanese yen. We are watching some sectors like real estate, financials leading those gains. The Kospi is also up 0.25% coming back from holidays. Citadel Securities CEO Peng Zhao says he's not currently considering an IPO for his company. Speaking with us at the company's global macro conference, Zhao discussed the growing reasons why his firm and others in the U.S. are choosing to stay private.
We need to see more IPOs, okay? And we've seen way fewer IPOs than we used to. And the leading reason companies are no longer going public is, on the one hand, they find it easier to raise capital privately. On the other hand, the negative side effects of being a public company as a result of regulation like the ones you are mentioning that's happening to grow right now, it's giving people longer and longer pause. Right? Until that changes, it probably also means next time when you try to ask me, when you ask me whether we're going IPO or not, the answer will continue to be no. So, so from that perspective, we remain concerned about the overregulation and this negative attitudes towards corporate America.
I hadn't thought about it that way. You take companies public or help take companies public, and you're privately held yourself. What are the challenges? How do you think about that as somebody who is such an integral part of the capital markets? What is the biggest issue of companies not going public for longer?
You know, it used to be whether that we are not being a public company or this was covered as well. You know, we are not a primary dealer in U.S. Treasury markets. Our counterparty used to use things like, hey, are you a publicly traded company? Are you a primary dealer? As a way to qualify us as their counterparty. And increasingly, given our sophistication, given the changing market structure, and frankly, given our track record and the level of service that we have been able to deliver, we're finding that becoming less and less relevant in our clients and in the market's mind. Right? We transact with the largest financial institutions in the world that have the highest standard when it comes down to who they do business with and who they don't. Whether you're a central bank, you're a sovereign wealth fund, you're a large pension, chances are we are one of your biggest counterparty, if not the biggest. And without us being a public company or a primary dealer, quite frankly.
Citadel CEO Peng Zhao speaking with our colleague Shonali Basak. Take a look at how European futures are trading at the moment after gains that we saw in the previous session. We had tech and automakers outperforming, all to do with, of course, the ECB rate decision next week. The probability is that they will lower rates, and we're also watching out for that stimulus announcement perhaps coming from China with the finance ministry's briefing on this Saturday, and optimism perhaps in the luxury sector in Europe, where we do see always that outsized reaction. We have more ahead on the Asia trade. This is Bloomberg.
What we saw in the last several months, really since after the first 2 months of this year, is that the labor market has downshifted. It's now at a sustainable pace of growth. We are just where I believe we need to be at full employment, not growing too fast, not growing too slow. And I am now quite confident that inflation is on path to hit our 2% goal.
San Francisco Fed President Mary Daly there on the inflation, and as markets price in future Fed rate cuts, we have seen that strength returning for the U.S. dollar, gaining for an 8th consecutive session, the longest winning streak in more than 2 years. On the other side of the trade, we have seen downside pressure for the Japanese yen, but we're seeing a little bit more of a rebound in today's session. This, of course, as we had PPI numbers surprising to the upside and showing that inflation continues to accelerate in Japan. Take a look at the Kiwi dollar right now, holding steady, but after hitting that 7-month low against the U.S. dollar. The RBNZ carrying out that 50 basis point rate cut in the previous session, and we have seen the Aussie rally against the Kiwi. The offshore yuan holding steady. Of course, there's a lot of speculation on whether or not we're going to see more fiscal measures coming from Beijing. China's central bank now saying that it's accepting swap facility applications starting today for securities, funds, and insurance firms. This comes after the Finance Ministry announced that it would hold a press briefing on fiscal policy this Saturday. For more, let's bring in our China correspondent Min Lo joining us from Hong Kong. Min, what can we expect from Beijing?
Yeah, well, that swap facility that you mentioned earlier, that was pretty much a follow-through of the measures that were announced just before the Golden Week holiday at that PBOC press briefing. So a very quick follow-through here that could maybe pave the way for more funds flowing into the financial markets. As for that briefing by the Ministry of Finance this Saturday, the Ministry of Finance is tasked with issuing bonds. And so there is a lot of market expectations now that we might finally hear that number, the size of the fiscal stimulus package and the composition of it. Markets are now pricing in about 2 trillion yuan of new special sovereign bonds, and anything below that might disappoint markets. Citibank has a higher estimate of 3 trillion yuan. But look, we have seen a very volatile few sessions in this week and also just before the Golden Week as well. And there has been extreme calls for as high as 10 trillion yuan in fiscal injection. But if the PBOC briefing is anything to go by, that swap facility, for instance, is 500 billion yuan as the initial tranche. So what we're expecting to hear from the MOF, it could be also a similarly smaller size initial injection, maybe to the tune of 300 or 500 billion yuan, followed by more similarly sized injections later on if the economy needs it.
I was asking a guest earlier whether or not China was a risk or was an opportunity for investors, because it seems there's so much expectation right now of what might come out from Beijing. What are we expecting markets to do now?
Yeah, like right now, well, at least yesterday afternoon, we continue to see those equities selling off even after the announcement that the MOF briefing could be coming. And so it looks like traders are still pretty cautious. They are on a wait-and-see approach here, trying to assess the strength of those measures before piling on. And also, we have seen very volatile trading over the last few days. The timing of the MOF briefing actually is quite interesting because it's happening on a Saturday when markets are not trading. And there's a lot of market chatter now about whether that was intentional, perhaps part of the officials' plan to avoid the sort of wild swings that we're seeing on the stock market so that investors have time to digest that over the weekend before markets reopen on Monday.
Yeah, I was thinking that timing was pretty interesting. Bloomberg's China correspondent Emanuel there. And we do have breaking news at the moment. We are now hearing from the National Hurricane Center that Hurricane Milton has made landfall as a Category 3 hurricane. Now, this, of course, has been downgraded from Category 4, but we know that even as a Category 3, it is expected to really wreak havoc on Florida, especially if it makes a direct hit towards Tampa. We are expecting the repercussions and what's happening right now, as you can see those live pictures, extreme rain and winds to affect really the economic output of this whole region. It could be one of the 10 costliest storms to hit the U.S. in recent years. And now Hurricane Milton has made landfall as a Category 3 hurricane, according to the National Hurricane Center. We'll continue to watch the developments in Florida. Now, this is the latest from the corporate front. Country Garden is said to have missed a self-imposed target date for getting key creditor support for its restructuring plan. Sources say the Chinese developer has yet to deliver a term sheet, despite earlier hopes of agreement by the end of September. The delay underscores the challenges that remain in the property sector, despite Beijing's latest stimulus efforts. Bloomberg has learned that BlackRock is among firms exploring a purchase of U.S. investment company HPS Partners. Sources say the two companies have held talks as the HPS also pursues a potential IPO. Multiple potential suitors are said to be weighing deals, including CVC Capital Partners. Tesla is taking the wraps off its long-delayed Robotaxi later Thursday in a high-stakes presentation for the EV pioneer. Tesla's new product will face tough competition in China, where self-driving taxis have moved beyond trials and onto public streets. Our Chief North Asia correspondent Stephen Engel reports from Beijing.
Already dominant in their home market, Chinese EV makers aim to lead as well in the self-driving realm, from advanced robo-taxis to larger semi-autonomous semis.
The game for autonomy is in China. That's why Elon wants to roll out his own FSD there.
Tesla, along with its Chinese navigation partner Baidu, plan to make FSD, or full self-driving, available in China by as early next year, pending final regulatory approval, after getting an in-principle okay from Beijing in April.
It's a watershed moment, and this unlocks a golden opportunity.
At least 9 domestic Chinese automakers, plus smartphone giants Xiaomi and Huawei, among others, have a head start, though, locally through real-world traffic pilot zones in multiple cities across China, seeking a leg up in so-called ground truth data.
At the moment, the local knowledge gives them the advantage because, again, the scale. The scale is uncompared to anywhere else in the world. But as Tesla leans on that scale, as you mentioned with the Baidu cooperation, that is slowly going to be eaten away over time. And unless they can also do that kind of data gathering outside of the country, Tesla will at some point not only become competitive, but may ultimately become a market leader.
我觉得
I think Tesla's full self-driving is great. I like it too. But FSD's breakthrough only took place in the past 12 months. I think Xpeng's XNGP and Tesla's FSD can both perform well in the global market.
Tesla is indeed a pioneer, but everyone is beginning to get closer. Chinese car companies have a better understanding of the needs of Chinese users and the needs of China's road conditions.
This is a pretty narrow road. You can see all kinds of different scenarios like bicycles, pedestrians, vehicles cutting in, cutting out.
Toyota partner Pony AI has been real-world road testing its robotaxis for more than 6 years. So we hailed a ride in Beijing.
Tesla's FSD coming into this market, is it a threat?
It's definitely a good thing. More competitive this market is, it means the better products will be offered to the customers. We need to have the customer acceptance. That is very, very important. The customers have to trust this kind of technology.
Oh,
whoa, wow, what happened?
Somebody pulled out suddenly.
Oh.
The brakes work.
Safety and certainty are clearly important as well for another electric vehicle industry in China in the so-called low-altitude economy. That includes airborne EV delivery of packages and passengers. Yihong is perhaps the most well-known of the Chinese air taxi makers, but Volant Aerotech 2 hopes to have its $2.5 million VE25 certified by mid-2026 as China opens its lower airspace to piloted and pilotless eVTOLs, or electric vertical takeoff and landing aircraft.
There's a huge potential in this area.
Electric vertical takeoff and landing commercial drones come in many shapes and sizes, and they are throwing lots of money at it.
So much so that at least 20 provinces say they intend to build out their own low-altitude economies.
The vehicle itself is carbon fiber, and it's generally produced all domestically. The battery ecosystems which they use are here. So all of the ecosystems and manufacturing is already located domestically. So that actually gives it a huge edge over any competitors.
Now is a little bit challenging time between China, Europe, and the States. I think it's important to have the communication and not afraid of everything. We are trying to build this aircraft for the world.
The next real test for autonomy, both in the skies and on the roads,
it's slowed down,
will be to see whether customers are afraid or not to get on board. Stephen Engel, Bloomberg News, Beijing.
This is the Asia Trade. One of the top geopolitical stories that we've been tracking, Japan's Foreign Minister Takeshi Iwaya has asked China for a proper account of motives behind the stabbing death last month of a Japanese schoolboy in Shenzhen. In the first phone call, he told his Chinese counterpart Wang Yi, uncertainty around the incident is worrying Japanese people in China. Beijing has also not explained the motives behind a June stabbing incident against Japanese nationals. And this, of course, comes as Japan's new Prime Minister Shigeru Ishiba has dissolved the lower house of parliament ahead of that national election on October 27th. While it's unlikely the ruling LDP will lose control of parliament, the scandal-plagued party may drop some seats. Ishiba's surprise emergence as Prime Minister signals a bid by the LDP to strengthen support by turning to a leader with a cleaner image. Our next guest says the U.S. and its allies can isolate Beijing economically by forming a new trade defense coalition. With us now is the U.S. Ambassador to Japan, Rahm Emanuel. Ambassador, always great to see you.
Nice to see you, Shery.
So tell us a little bit about what do you mean by this coalition?
Well, first of all, the trade coalition is a complement to what we're building on the multilateral approach here, U.S., Japan, Korea, U.S., Japan, Philippines, the Quad, where what China tries to do, and they did with their wolf warrior approach and also the military aggression towards countries in the region, is isolate themselves. And they have a practice of being the isolator, but now they get isolated. And bringing an economic component to what we've done on the diplomatic side, what we've done on the security side, now bringing economic statecraft to that strategy. And it would understand, Japan's been a target of coercion, Australia's been a target, South Korea, Philippines, Lithuania. Australia's example, I think, as I lay out in the piece in the Wall Street Journal, is they basically expanded their trade, worked their trade, et cetera, and were able to withstand China's coercion and isolation and basically China threw in the towel. Do that as an example of a trade defense council. Many countries have at the core of it an Article 5-like principle. An attack on one is an attack on all. Therefore, China cannot isolate Australia, isolate Japan, because it means all 50 countries standing and unified. That's one piece of it.
Right.
Second is the United States has a 1977 Presidential Power Act, strengthen it for the digital economy, information economy. And then third, a more robust lending program to the developing world, because I think today it's sclerotic, given how the United States tortures countries, how European countries torture other countries to build their roads and infrastructure, because the debt trap strategy of China, again, limits a country's sovereignty. Every one of these economic strategies by China, coercion, mercantilism, or debt trap, limits another country's independence and sovereignty.
Will it make it easier for Washington to cooperate and work with the new Japanese administration after the elections and now having the new Prime Minister Shigeru Ishiba, as opposed to perhaps other candidates that work?
Right. I think the way to think about it is not just U.S., Japan, because you'd have Europe part of this, you'd have other countries that are kind of in the OECD. It'd be open to countries that understand the rule of law equitably applied to all countries, regardless of size or economics. Second piece of it, which is important, is understanding inherent in China's strategy or tactics of coercion or mercantilism or wolf warrior on the political side. There is a weakness there. It's inherent in the system. They're trying to isolate that country. You flip the script on them and they become isolated. That is why they threw the towel in on Australia and said, okay, we can't do this anymore because it's not working. When Lithuania was targeted, the EU came to its defense. Multilateral is a deterrent effect in and of itself against China.
How do your views match with, say, what Prime Minister Ishiba has said in the past about an Asian version of NATO?
Yeah, look, I think we've been very clear. He's been clear since that it's an idea he'd like to discuss. This is on the economic statecraft. If you really look at kind of what President Biden has built over the last 3 years, this multilateral, what I call lattice work-like system, replacing the hub and spoke. It has a robust political side, a robust diplomatic, a robust security side. We're about to have another set of multilateral exercises on the military and training. It brings the economic statecraft that's been, I wouldn't call it dormant, but not at full speed, up to full speed. And then when you look at the 70-plus years of the kind of West versus the East, as known as the Cold War, there was an integrated approach between our political, our economic, and our security. That same kind of integration must be applied in an effective deterrence so countries don't lose their sovereignty and see America as the leader of that effort.
How are you setting the guardrails for after the U.S. elections?
Well, I mean, there's, first of all, a lot of what the president's put in the administration is the attempt is to institutionalize it so it doesn't just live with President Biden. I think the trilateral with Korea and Japan and the United States is clearly one of those that's on a strong footing. What I mean by that is, go back to August of 2023, Camp David with the historic meeting that the president hosted the 3 leaders. Since that time, there's been over 60-plus trilateral gatherings on the security side, diplomatic side, head of state level, etc. That's almost 6 a month. That's a pretty aggressive schedule when you think of worldwide demands and commitment. So there's another effort to put a down payment on that. Coming up soon, there will be a trilateral military exercise. There'll be other government levels and minister level trilaterals. So it's not wedded or tied just to President Biden. It becomes an institutional force within the American foreign policy.
Really have to have the willingness of all leaders on all sides, right? I mean, there was a lot of concern coming into the Japanese LDP ruling party election that perhaps we were going to get a prime minister who would constantly visit Yasukuni Shrine, really intensifying the tensions with its neighbors. What do we need to see from the next administration and the Ishiba administration also being able to have that political capital to push its agenda forward? We do have the summer upper house elections as well.
It's a very good question. I mean, one of the goals is to ensure that you build off of it and take an endeavor to build something on that. You could argue, I mean, take another part of the world. You have obviously the Camp David agreement under President Carter between Israel and Egypt. It sets a precedent for what becomes Israel and Jordan. There was an effort under President Trump on the, the Abraham Accords. There was aggressive discussion and effort behind bringing Saudi Arabia and Israel together. So you build off of it. Obviously, the next president of the United States, if you institutionalize it, they'll bring their own weight to that in signature, but you have to start with the fundamental belief that allies and alliances make America stronger.
How much more challenging is it for you to really set the foundation and be able to have the next administration build on your efforts, while at the same time you have the U.S. election campaigns and issues like Nippon Steel's takeover of U.S. Steel, for example, that becoming a political issue?
Well, personally, I don't think it's become a political issue. As I remind everybody, I mean, first of all, that's in a CFIUS, a regulatory process, so I have to be careful. But that said, look, I think it's about 4 months ago, the United States made a security decision that the cranes at our ports were built by China, operated by China, they had data that was really a national security interest. A Japanese company received a $20 billion contract by the United States, build a factory, replace all the cranes at every one of our ports in the United States. I can't think of another way of saying trusted colleague, partner, ally, friend, than a $20 billion contract. Forget the dollars, but for something that we thought was a national security risk, we think Japan is not only not a risk, it's somebody we can trust. Second, you got to go back. I mean, you can point to Nippon, fair question. I can point to Toshiba 5 years ago here in Japan, when a United States company was thinking about it, and Japan halted that. You have Canada company looking at 7-Eleven here, and Japan's now thinking about it from a security standpoint, 7-Eleven. So as somebody that practices politics, I get that, but I think when you take a wider frame, the U.S. relationship with Japan, Japan's relationship with the United States is bigger, deeper than one financial or business transaction. And the other thing, for 4 consecutive years, both countries have been the #1 foreign direct investor in each other's country, and the trade is very, very robust.
When it comes to Washington's attention in the region, and not just Japan, how likely is that Washington will be very distracted with everything else going on in the world, and of course the escalating tensions in the Middle East?
Well, look, I mean, you say that, but we've had conflicts in the Middle East, conflicts in Europe, and we had just a few months ago the 2+2, the Secretary of State and the Secretary of Defense were here. In a couple days, the Deputy Secretary of State's here. We're going to have a major set of meetings here. We just had the head of Indo-PACOM, the entire kind of force structure for the region, who is here meeting with the Foreign Minister and Defense Minister. I can tell you, having been in now 3 administrations, President Biden's administration and the leadership haven't missed a beat. And I say that as a former White House Chief of Staff and a former Senior Advisor to the President. Sometimes I joke, I've had so many visits from Washington, I'd like COVID restrictions on travel. So I don't, I'm not to say that the conflicts don't draw people's attention. That would not be accurate. But the idea that things are not being paid attention to in the region because of that, absolutely not true.
Ambassador, always a pleasure to have you with us. Thank you very much, Ambassador Rahm Emanuel of the U.S. here, of course, in Japan. Of course, if you missed any part of this conversation, TV Go is your function. You can also watch us live and see our past conversations, delve into any of the securities or Bloomberg functions that we talk about, and become part of the conversation. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Do keep an eye on Korean bonds today. We are seeing 10-year bond futures gaining ground after the holiday and, of course, after the FTSE Russell included it to its global bond index. When it comes to Japan, do watch out for earnings as well later today from Seven & i and Fast Retailing. And, of course, this at a time when these retailers, of course, have seen some fluctuations given the Japanese yen right now holding steady at that 149 level. But we have seen the downside pressure given, of course, the strength of the U.S. dollar. We do have inflation numbers out of the United States this week as well. And the direction of the yen, the direction of the Bank of Japan, very important for broader markets. And we'll be able to hear more about that from the Bank of Japan Deputy Governor Yoso Himino, due to deliver a keynote address later on Thursday. Subscribers can watch his speech from the Navigating the New Japan Forum, streaming live on Bloomberg.com and Live Go on the terminal at the times on your screen. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.